The bears are wrong yet again, and if you listen to them, it could be very detrimental to your trading or your investment. So on Friday, the market started to pull back, and as it always does during a pullback, people start to claim that the top is in, we're going to start crashing, or we're going through a deep, dark correction. And while that could be true, we have evidence from the charts and the price action that tells us that is not going to be the case. And if you buy into that fear-mongering crap, you are not going to be able to take advantage of the pullback because you're going to be too scared to do it, or even worse, you're going to try to short the market and then lose money on the way back higher. So the first thing we need to look at to show you why the market is not crashing through 100% objective evidence is none other than Berkshire Hathaway. And if you don't know this, you're either living under a rock or you're just starting out, but Berkshire Hathaway is the stock market fund that Warren Buffett himself is managing. And as of today, they reported earnings and they are breaking out, currently up over 3.5% to a brand new all-time high price. And this you will never see in a bear market. You will never see price action like this during a stock market crash, and you will never see this in a market that is about to roll over and die and go into a bear trend. Keep in mind, Warren Buffett is an investor in stocks, and if he is absolutely crushing it, like we just saw right here on the earnings report, where he beat profitability on earnings per share by over 45%, and then he beat revenue expectations by 3%, that is not something you are going to see in a nasty bear market that's about to crash, especially when he's not even lowering guidance for the next quarter, still claiming that he's going to make $91 billion next quarter, on top of that with the very profitable earnings estimate. So again, the sky is not falling. Do not buy into the fear mongering. It is 100% completely normal during bull markets to get pullbacks. And the most important thing I want you to pay attention to, if we jump over to SPY, is that we are still in a range trading market, and in a range trading market, we are mostly going sideways. That means as we get to the top of the range, which is up there right around SPY 608, that is where traders are locking in their profits, and then they're going to be buying near the bottom of the range, which is down here right around 594. So if I show you from the all-time high to where we are currently right now, we are not even down a full 2.5% from a previous all-time high, and people are already thinking they can call for bear markets and crashes and corrections. I've told you so many times, block out all of that noise and 100% be objective and follow price action. And the price action I told you to watch, that if we couldn't hold above that breakout at 608, then you could get risk off and you could look for a pullback down towards lower supports. And we are currently sitting at lower supports at the 50 EMA, which is right around 599. And then below that, we have the range lows right around 594. And if we can't hold all of that support, then we know we are going down towards a gap fill at 585. Now, even if we went all the way down to 585, that would only be a pullback of 4.6%. And that is a 100% mild pullback within the grand scheme of a bull market, especially if it's just another higher low before we continue even higher. So don't buy into the fear mongering. Make sure you have a plan on managing risk, which includes breaking down below 594 and going down towards 585. But more importantly, don't write off the possibility of another higher low bounce to another all-time high breakout, which would still take us to the price targets above. So SPY above 594 could easily still head higher to all-time highs, as I just showed you with Berkshire Hathaway. And keep in mind, Warren Buffett is considered one of the greatest of all-time investors, and he is not selling stocks. He did position and move around, but as you can tell, he is absolutely crushing the market still. And there is no way he can do that as a long-only investor. He is not shorting the market. All he is doing is buying stocks and they're going higher, and that is why he is crushing the market. The fear mongering is real, but you need to learn to block it out, and you need to be an objective price action trader if you ever want to be profitable at this. And right now, price action is still telling us this is a simple pullback within a bull market that is still likely going even higher. So right now, with the current price action on SPY, manage risk at 599 and 594. And if we can't hold that, you're looking for 585. But if we do start to bounce from here, we could still continue to go higher towards 616 and then 624. On the NASDAQ 100 triple Qs, we are currently trading right around 523. And just like SPY, we had recently just made a brand new all-time high only 3 days ago. And as of now, we are only down about 3% in this pullback from the previous all-time high. And we are currently sitting right on top of the daily 50 EMA at 522. And if we can't hold that, we go down towards 516 and then 510. Once more, I'll remind you this is range trading. So as we got to the top of the range at 538, we were seeing profit taking, and that profit taking is currently bringing us down to the bottom of the range between 516 and 522. From here, we could easily put in another higher low bounce and continue higher towards 546. So do not rule that scenario out. I'm not saying it has to happen, but it is still a bull market trending higher. And in a bull market trending higher, you are usually just going to put in another higher low before the next higher high. And that higher low could very well be right here at 522, which would be higher than all of the previous lows before it. Higher low above 522 means we're going to 546, and this would be a buying opportunity with a low risk entry because you know exactly where the breakdown is to tell you you need to manage your risk and get out of the long position, which would be the break below support, just below price at 522 and 516. So manage risk. I'm not saying blindly buy the pullback. I am telling you that is more than likely going to be another higher low pullback before we continue even higher. And that is very evident by Berkshire Hathaway kind of spilling the beans and snitching that we're going higher. And again, that cannot happen in a market that is crashing or a bear market that is beginning. That is all fear-mongering crap that you need to learn to filter out. If you want to come trade with me, the best way to do that is TSC Trade Alerts, where you get the exact trade alerts that I am taking for the percent allocations of TQQQ or SQQQ. And we are absolutely blowing this market out of the water, continuing to outperform the market by a very healthy margin. You can find out how to join TSC Trade Alerts by clicking on the link in the description of this video.